Coming up today, stocks start the week flat, going into the big inflation print on Wednesday, and Q1 earnings season kicking off this week. The latest warning from Jamie Dimon, why gold could have further to run, and how AI could also squeeze the copper market. And a warm welcome back everybody to this quiet Monday session on Wall Street. Main indices pretty much finished flat, and we're continuing to having a little bit of a bounce back up the front in the growth sectors. Whilst we've still got yields, oil, gold, and energy in the strongest uptrends, and we've still got all main US stock indices above the 50-day VWAP, except for the Nasdaq equal weight. That's the only one trading below here. Also got a little bit of weakness and breadth, with less than half of all stocks below their 20-day average. And we got a bit of a volatility crush to start the week off. I think the market was pricing in a potential response from Iran towards Israel over the weekend, which we didn't get. However, we still may get any day now, as it's still highly likely Iran will have to respond to Israel taking out some top military commanders in the Iranian embassy in Syria early last week, and Israel says they're on standby and ready to respond to that as well. And even though the US and the West doesn't want Israel to keep going on an offensive, Israel Prime Minister Netanyahu has promised to move forward with an invasion of Rafah, which is a big southern city in the Gaza Strip they haven't really gone into yet. And so we've got a really aggressive Israel, much to the dismay of the Biden administration and Western diplomats. They are pushing ahead with their offensive, not going to stop until the job is done, and so it's highly likely we see continued flare-ups and a response from Iran, with the US already issuing warnings to Iran not to target any of their assets in the region, in which case, if they do, the US-led Western alliance will have to respond to that as well. And there's a look at crude today. Had a little bit of a dip down to $84.60 a barrel before recovering and holding up there, and we're continuing to see a march higher in bond yields as well, going into the big CPI inflation report this Wednesday. On the back of a really hot jobs report on Friday, US economy created 303,000 new jobs in March, well ahead of expectations of 200,000, and we don't really have much economic data out until first thing Wednesday morning, when we'll get a look at inflation data. Headline expected to come in 3.4% year over year. That's an increase on February at 3.2%, and core inflation expected to come in at 3.7% year over year. And as I've been saying, looking at the price action in bond yields these past few weeks, bond market's signaling to us that it doesn't look like the Fed's going to be cutting rates anytime soon, and that's because they simply can't. It's just much too risky to do that, as much as they would love to go ahead and trim. And that's because the US economy continues to hold up, if not accelerate, and by some measures, the odds of a US recession in the next year have dropped to a 2-year low. And it's an interesting macro setup, because if that were the case, it would truly be different this time in terms of the inverted bond yield curve, how deep and long it's been inverted, not playing out to cause a recession. And now we're getting a growing narrative that we may not even get a rate cut this year, given how strong the jobs market is, consumer and government spending, not to mention risk assets and commodities ripping out higher. This market really doesn't need any rate cuts. And who's to say we don't actually need a rate hike, like Jamie Dimon's saying? Interest rates could hit 8% or more, and wars are creating outsized geopolitical risks. The CEO of the world's biggest bank sees opportunity in AI, says war with Ukraine and hostilities in Middle East pose risks that could eclipse World War II. And there's a look at short-dated government bond yields on the 2-year breaking out today, almost hitting 4.8%, and the 10-year again, high highs, high lows, multi-month breakout, getting up to 4.46 today, causing further weakness in bond prices. However, we've still got risky bonds holding up above support for now. And so not only do we have yields trading up going into CPI Wednesday, also got Q1 earnings kicking off this week. First, we'll get to hear from Delta Airlines on Wednesday, and then going into Friday, we always have the big banks kick things off, and we'll get to hear from JP Wells Fargo, and Citigroup on their results and commentary on the economy and what they're seeing out there. And the banks have been trading pretty strong ever since we bounced off those October lows. They've held on to this parabolic uptrend, and JP just sitting below all-time highs. And a few weeks ago, we had Jamie Dimon, the CEO, offload about $150 million worth of shares for the first time ever. And so it'll be interesting to hear what they've got to say about the banking industry. But what's really been leading financial markets lately is that of gold, with some research saying it could have another 50% in upside if we do get that second wave higher in inflation, 1970s style, when gold ripped up back then as well. And it shouldn't be all that surprising with the amount of money sloshing around in the system, the huge amount of underinvestment in commodities and mining over the past 15 years, on top of geopolitical tensions. All the ingredients are there for a price squeeze, not to mention a dovish Fed, which also adds tailwind to gold. If we're not going to see higher interest rates, that should help keep a lid on the dollar as well. And one of the biggest drivers of price has been the strong accumulation from central banks trying to in particular, accumulating gold at record rate, looking to diversify their reserves away from USD assets. And since we don't have nowhere near record peaks of public participation, assets under management in gold ETFs, or institutional positioning, it could still have a lot further to run. And there's a look at the daily chart on gold, just gone super parabolic. You can see that in my trend strength at 31, which is really strong here. And again today, high high, high low, now creeping towards $2,400 an ounce. We've also got silver on the March higher, breaking out with strong momentum and trend strength as well. And if you tuned into my video on Friday, I did a special on how AI is helping to drive a lot of demand and boom in nuclear energy, with some companies like Amazon buying a nuclear power plant and sitting it right next to an AI data center. Also got Microsoft advertising for jobs to do with nuclear energy. There'll be a link at the end of this video to that one if you missed it. AI is also helping to drive demand in the copper market. That's because copper is an efficient conductor of electricity and a key ingredient in power plants and data centers. And just like nuclear, there's a demand, supply and balance. The world is already producing less copper than it consumes, and AI could push that gap wider. And just like many other commodities, copper too is pushing up really strong price action, volume, trend strength, not only on the daily chart, but also breaking out on the weekly chart and looking pretty good on the monthly chart as well. Breaking out after we've been basing for over a year. And let's not forget about agricultural commodities as well, now in a really strong uptrend as well. Moving on to cryptos, we've got a nice bounce to start the week off here in Bitcoin as we go into the 4th ever halving on April 20, just a few weeks away. And the SEC is also going through a discovery period for Ethereum ETFs. Maybe why we got a good bounce in Ethereum today, up 6.7%, just under 3,700 a coin, and Bitcoin creeping back up, testing all-time highs, just below 74,000 a coin. Also got a bounce back in Tesla today, after being beaten down on Friday on speculation. They're scrapping plans to make a cheaper Model 2. Elon came out and tried to save the day by promising to unveil the robo-taxi on the 8th of August. A pretty tall order, and this is still in the midst of launching its Tesla Cybertruck, which is yet to be proven as a quality product. And so there's a lot hanging on Tesla in the coming months here. Speaking technically in price actions, trying really hard to defend this 160 support zone, and believe it or not, stock price has gone sideways for almost 4 years. Still have this really broad topping pattern, and with earnings a little over 2 weeks away, they've got their work cut out. Prove to the market that it's still likely to experience high growth in the years ahead thanks to all these new products. But not only that, high interest rates have been hurting Tesla the last year and a half that they've been high. Now we've got a flood of cheap EVs coming out of China. That's why we've seen a crash in the average price of a used Tesla, peaking out at 68,000 in mid-2022, cut in half, now sitting a little over 31,000. And even though this is the price of used Teslas, that also adds downward pressure on the price of new Teslas. That's why they've cut prices a few times, and we've even got the likes of Janet Yellen making a little holiday over to China to try and encourage them to stop flooding the market with cheap EVs and other products. Just moving on, there's a look at Fed Fund futures going into CPI Wednesday, sitting pretty much 50-50 chance. Fed's going to cut in June. That could swing a lot after we get the release on Wednesday. And looking at the price action in commodities lately, it shouldn't be surprising if CPI comes in a little hotter than expected. If not, it may be around the corner next month or going into June. Greed index still holding in the mid-60s, and corporate insiders not doing a whole lot of trading here. Got a little bit of a bounce in Chinese ETFs here today. Still yet to find a solid uptrend, and maybe coming up to a bit of an inflection point. Looking at the long-term weekly chart, pushing up against this downward trend line, and same with the closely correlated clean energy sector. Still yet to prove whether we've found a bottom here after a multi-year bear market as well. International stock indices off to a sleepy start for the week, so we may trade like that until Wednesday, whilst we've still got this strong bottom momentum upward thrust pattern coming out of the spread between commodities and S&P 500. And there's a look at NVDA sitting right above its 50-day at 871, and the best performing mega cap tech stock Alphabet sitting right below all-time highs here with a little bit of trend back in this market as well. Volatile action in the new spin-off GE Vernova up 6% today. More volatility in Trump media down another 8.4%. This could be setting up for a bounce if we can see the meme crowd come back into it, and Reddit as well. So look at ExxonMobil just having a little bit of a pullback here. Still looks to be in this parabolic uptrend. And regional banks, along with the major financials, holding up pretty good going into Q1 earnings season starting later this week. Alright guys, there we have it. Bit of a sleepy start to the week. May see the same tomorrow going into Wednesday morning CPI. And right now we have bonds selling off going into that. Bit of a pullback in volatility along with crude and gold sitting pretty as well. Thanks very much for tuning in. Could be an interesting week, so make sure you stick with Click Capital. See you tomorrow guys. Cheers.